This is a 12-month chart, yes, a yearly chart of the S&P 500, and we've had 3 straight back-to-back years that were really solid. So I had a question that I wanted to do some research on that I wanted to share with you guys, which is after such a strong period in the S&P 500 in the last 12 months, what is the forward average return of the S&P 500? And for good measure, I also did the same study for those of you guys who like gold, so I'll share with you what I found. Okay, so check this out. I've selected for the S&P 500 in our new scenario backtests, and if we take a look here at the last 12 months return being over 15%, which is the most relevant example here from this list, as you didn't quite hit 20% in 2025, but we did hit over 15% returns on the S&P 500 in the last 12 months. So what do the forward returns look like for the S&P 500? Well, after studying 1,461 examples, here's what the stats tell us. On a one-day outlook, there is about a negligible return. Same thing with the 1 week and also for the 1 month. When we look out 6 months though, the average return is about 3.4% and the 12-month return is 7.39%. Now remember that the longer term average of the S&P 500 has been around 10% per year. So what this tells you is after a big stock market run up, the forward-looking returns are a little bit less than usual, but still positive looking out 1 year further. And I also wanted to contrast this with the other extreme example, which is in the last 12 years return, if we lost more than 20% in the stock market in the last 12 months, which only occurred 244 instances here that were studied, looking back 12 months on each day. And what you can see here is that in this case, again, kind of negligible in the short run, but then look at the forward returns looking further out, 6 months and 12 months out, you can see that there's a pretty good historical average return when the stock market is down. So it's almost very simple. It's almost like too easy, but basically the idea is when the stock market's been down a lot, the forward-looking returns historically have been much better than when the stock market has already been up a lot. And we're going into year 4 of this bull market. Again, I'm not bearish because the stats still generally favor more upside, but I do think that we want to be careful of expecting the same kinds of returns that we've had in the last 3 years. But what about gold? So gold, interestingly, has a little bit of different of a conclusion here, at least from the studies that we've done here. Over the last 12 months, we've had a really solid return for gold and definitely over 20%. Now, this has actually happened in the past before, and interestingly, the 12-month out average expectation is still pretty solid for gold following a 20% run up. So maybe if stats are, going to be something to go off of this year, maybe there's another good year for gold coming. We'll have to see. By the way, if you want to check out the tool that I'm using, head over to our website, a1trading.com. This is called the Edge Finder, and it is one of the best tools out there for retail traders trying to build an edge.